ticker symbol MULN may actually be experiencing a deeper capitulation than what we think. MULN holders, this could be my warning to you. What is up, you guys? Thank you so much for stopping by once again. This is ARCa coming at you with a ticker symbol MULN technicals, raw price action, and some statistical thread of analysis. Before we get started, please make sure to subscribe to the channel, like the video, and share the video with a friend so that you and them could consider joining our trading community and Discord called ARCa. With that said, let's dive right into the charts. Okay, so we're looking at ticker symbol MULN on the 12-hour chart here. Okay, so now MULN stock, I believe we covered this on a live session, right? But I'm not sure if we actually covered it in the last video of analysis. But I did suspect that we were in a type of ABCD structure here. Okay, so and I did talk about it within when we were about over here, right on the, let's see, about maybe January 3rd is where I think I may have called this. And I did signal that the downside is very likely for us to come back down and touch on test letter C. My apologies. So in this case, you can see that the capitulation event has begun, and it has since gotten really close to that C point. But the reason why I'm saying that I believe that this may not be the end of that capitulation is not only because C is located at about 24 cents. No. What I'm talking about is actually based on deeper study. So I started looking at the charts in a different form, and I actually did catch something of particular interest here. And there are a lot of signals that are backing it. So let's go ahead and move on to that chart now. So this is now on the 6-hour time frame opposed to the 12-hour time frame. Okay, so what we're looking at here is a broadening ascending wedge. Okay, now it's playing out pretty much to the dot, and it's actually a typical setup too. So what was throwing me off on the last one is that we came from a falling wedge, right? And we actually had an upside that we absolutely met. Okay, very good. So now, you know, in looking at this formation, you could actually be blindsided, and you know, you can actually not look at this candle as that beginning of the formation itself, right? So upon looking at a brand new chart, I actually wanted to see why, or the reason why behind this, you know, this capitulation, other than the fact that we had already seen the potential of that downside coming in. Right, I wanted to see if there was something else, and this popped up. Okay, so broadening ascending wedges usually have a downside target. They're a bearish formation and tend to happen during bear market cycles very often. Okay, so in this case, you can see that it is following the golden rule of three very much to the T. Okay, so this is the genesis. This is the genesis of the formation itself. Okay, and this would be the lowest point of the formation. Okay, so you can see that from the genesis we have test 1, test 2, and test 3. Usually test 3 presents the biggest capitulation and usually gives the short sellers that confirmation for a continuation to the downside, right? So the way that this is usually played is that when short positions see this formation, they can actually imply that the upside could land somewhere around this area here, to where they open up an aggressive short position, right? Trap a little bit of some longs on here, and then actually open up or scale up once more, or scale down, right? And short it all the way to the take profit zone, which would be the support line of the formation itself. In this case, you can actually see that this was an immediate reaction, and I do not believe this reaction to be by longs. I do, well, essentially, what I mean by longs is that, sorry guys, just had to adjust myself here. What I mean by longs is that what I mean is long biased traders, right? So in this case, I don't believe that to be the long biased traders that created this buy pressure here. I actually do believe it was actually covering of short positions. So meaning that they all covered at this typical location, right? So then this can be ridden all the way up to the closest area of resistance, right? And this would essentially open up another opportunity for them to short once again, and this would now show another take profit. Okay, so that take profit would usually be located at about in confluence to maybe the resistance of all of these candles here and the support from this candle down here, this candle being this, let's see, the wick low of December 28th, and these would be around December 8th, around there, the wick highs. So they are showing some confluence, right? So this could essentially be that take profit zone after opening up some short positions up here somewhere. So this could potentially get shorted down to about 20 cents, followed by short positions covering yet again, and then this can actually pressure, the covering of their shorts can actually pressure the price action to then start opening new short positions yet again on the confirmation or validation of the newly converted support into now a resistance, before opening yet again and then taking this to the eventual target, which is located at just about 18.13, so 18 cents, okay, or maybe even slightly under that, 17.99, but pretty much 18 cents. Okay, so this is playing by those rules pretty nicely. Okay, so this is favoring the bears greatly. Okay, so now seeing that volatility, well, first of all, volatility is what you're looking at here, represented by this indicator BBWP. And now volatility is direction neutral, so we usually pair it with stochastic momentum oscillator so that we can tell or gain a bias for that direction, right? So you can actually see that the primary moving average for that stochastic momentum oscillator has now pivoted straight to the downside, which can likely move the secondary average. It'll follow it, is what I'm trying to say, after another 6-hour iteration, since we are in the 6-hour chart. Okay, so be very careful with what's happening here, but this setup is kind of it's kind of basic, and it is kind of going by the playbook rules of this formation. Okay, so now let's go ahead and move on to the next chart, as I do have another validator to the downside as well. So we're going to refer to the ARC-Series Crypstex indicators. Okay, so these are indicators that have been given to me so that I can trade in different styles, right? So Crypstex Trading has believed in me and my style and my strategy, so they've given me access to these tools, very awesome tools. So what we're looking at here is ARC and it's comprised of several exponential moving averages, and they're all placed algorithmically close to each other in close proximity, starting from a hyper fast trend to about a snail type of exponential, all short period though. That helps us gauge this motion. Okay, so we can see that we're getting directional waves. In acquiring those directional waves, we can actually get buy and sell signals as well. So you can see right here, we got a long signal, it went up. We get a short signal, it goes down. We get a long signal, it goes up. And now the reason why I'm actually pointing this out right now is actually because of this short signal printed on January 12th. So not even on the 13th, which is when the capitulation started happening. So ARC came in and gave us that warning at literally January 12th, saying short. Okay, so now let's go ahead and now move on to the enhanced MACD. So this is ARC enhanced MACD, another one from the Crypstex collection. Okay, so it actually printed a little more aggressively. So this printed the bear signal on January 9th, to the signaling that the downside is near. Okay, so now you can see that the Bollinger Bands were very much opened up, and the contraction of the Bollinger Bands started tightening really hard, and now they're expanding yet again upon that downside. Okay, so it's now trying to do what's called or for the immediate short-term time frame, it's trying to do a mean reversion. Okay, so it's actually trying to come back to that balanced level. Okay, so these are yet again now two validators to that downside. Okay, so if you are interested in picking up these indicators from Crypstex and partnership with me, of course, ARCa, the ARC-Series indicators, send me a DM and we'll go ahead and go over the details as to how to acquire these, because they are subscription based. Okay, so let's now go ahead and move on to the last part of the analysis, which is the RSI. Okay, so what we're looking at here is divergence. Okay, so divergence is the opposition of price action versus momentum, and in this case, momentum represented by the RSI indicator relative strength index. Okay, so just so we can be clear, the purple line represents the RSI, the relative strength signal itself, and the pink line represents a 14-day simple moving average, which is typical and very much standard and stock to any RSI setup, okay, including in Weeble and all kinds of things like that, okay? So, yes, what we're looking at here are several drives, very much several drives of bearish divergence. Okay, so in particular, we have mostly confirmed. Let's see, one. There could be two right in there. No, there's actually one, two, and three drives of hidden bearish divergence, which usually happens when momentum is making a series of higher highs and the price action is making a series of lower highs. Okay, so now in this case, this one iteration right over here, which is this one right here, that is giving us a drive of regular bearish divergence. Okay, so we have 4 drives total of bearish divergence, and they are at play right now, and we were warned on January 11th. Okay, so this is very interesting the way this is playing out. Actually, that was warning on, still January 11th. Okay, very interesting the way it's playing out. So now let's go ahead and open up a multi-pane so that we can see the potentials for the coming session. Okay, so yet again, like we always do, let's go ahead and start off with the 30-minute immediate short-term time frame, and you can see that we are straight on a nosedive right now, and suggesting a continuation to that downside even still. Okay, so if we can look historically on that 30-minute, you can clearly see that we have other iterations to where we have reached exponentially low levels right here, or lower levels, sorry. And particular to this one, this is in the 10 percentile, so 9.51%. We're currently sitting at about 18.37, so 18.37%. Definitely room to continue to the downside here. Okay, so now gauging by the proximity from this RSI signal to this level actually does fall in line to what we're talking about within the formation. Okay, so particularly touching base at about let's see, to about 21 cents, right at about 20 cents, actually 20.43, 20.48, right around there, before a pickup, and then using this as a newly converted, or validation as a newly converted support into now resistance. Okay, so there are some potentials here for the downside starting immediately on the Tuesday session coming up. Okay, so let's go ahead and move on to the buy hourly. The buy hourly is still suggesting downside. It has now entered the oversold percentile. Okay, so let me just go ahead and open up that diagram for everyone to see. Let's go ahead and get this out of the way into the other screen. Okay, so this is the diagram here presenting us 4 zones that I would like for you to check out while I talk about them, as they're located right over here on the live chart. Okay, all these 4 zones. All right, so the buy hourly, yes, still suggesting that downside. Now the 6 hour is also suggesting a massive downside as well. All of the first 3 iterations of RSI of the RSI signal are below the moving average, which is usually bearish. Okay, and you can see that even the 30-minute is using it as a guide to the downside. Okay, so this is very likely what's going to start happening here with the 6 hour as well. Okay, so now particular to the daily, okay, because this was something that we actually noticed before, that there is a type of regression here. Okay, so now this line, the line on the downside, this one down here actually is particular because it is kind of governing the lows a bit. So we can see that there may be a limited downside here, which is very much, again, in accordance to what we're talking about within the downside of the broadening ascending wedge, sorry, which is could potentially be limited to just about that 20-cent level. Okay, so now so that's the daily, and it's still suggesting that downside. Okay, so now let's go ahead and look at the buy daily, as I believe the buy daily would actually be the one that we should be focused on the most. Okay, but because the distance from the RSI signal to that 14-day moving average, that is pretty much what we're kind of looking at, to that 20-cent level. Okay. Very much downside suggestion. Okay, I mean, it's still within the bull weakness percentile, but it's approaching the lower areas of the bull weakness percentile, which usually means that we're going to face some type of gravitational pull into the following zone, which would actually be the bear weakness. Okay, 3 day is still suggesting a little bit of downside, slightly bearish, slightly bullish. So, and the 5 day is slightly bullish, suggesting sideways. So we can see from the higher term time frame, the higher term time frame RSI or momentum, that the downside does have its limitations. Okay, and this is how we're able to see that the downside does have stages, and we can actually see an eventual target of about 18 cents. Okay, so this is my warning to you. Please know I'm not a financial advisor. Take whatever I do show and iterate within these videos as just a form of entertainment, as I can't suggest for you to buy or sell any assets. Okay, you guys, do your own DD and everything will be just fine. All right, if you need to get in touch with me, please go ahead and refer to the links below, as you will find the Discord and the Twitter there as well. Okay, please remember to reach out to me regarding the Crypstex indicators if you are interested in starting a subscription with those. You will need a TradingView subscription. Okay, so you would actually have to go to the TradingView website, and actually the affiliate link, my affiliate link, is actually in the description below as well. So if you want to start trading like I do, or charting alongside me to these videos, then definitely consider opening up a TradingView account. You will be able to use the Crypstex indicators on a free account as well. Okay, there are certain limitations when you open up a free account with TradingView, but know for a fact that it is still possible. And also, the subscription packages that TradingView offers are particular to TradingView software only. Okay, so Crypstex, they are authorized retailers within TradingView, so you would actually need to open up a subscription package with me regarding the indicators by themselves in order to gain that access into the private invite list. Okay, so that will do it for the video today, you guys. I wish you well, a great rest of your weekend, and I will catch you at the bell on Tuesday. Adios.